back with Stephen Poloz, former governor of the Bank of Canada. And Stephen, I want to ask you, you've just written a book about what lies ahead, the risks and the opportunities for the Canadian economy. It can feel like we're tilted to the risk side because so much of the news around inflation feels like bad news. But there is good news to be had. Just paint a portrait of where you see the risks and opportunities for us now.
Well, I suppose the risks are some of the oldest ones in the book, Amanda. We are in a situation where globally government debt is as high as it's been since World War II, and we have growing inequality amongst workers. That is mixing with politics to give us kind of a complex and maybe dangerous cocktail of what I think is inflation risk. And I don't mean the kind of inflation we've lived through over the last couple of years, but a true outbreak in global inflation, sustained one. This has always been associated with high government debt, and it's something that I think all investors should be paying attention to. But on the opportunity side, I think we are just poised on a place where I think there's going to be a major wave of disinflation coming from company investment in digitizing their operations and deploying AI. This is not widely discussed, and at least not in a quantitative way, more as a risk. I think it's actually happening. We can see companies are very actively digitizing, and that is on average, a company saves 10 or 15% in costs. Competition has not gone away. They are going to be out there competing with the other companies across the street, and that will get conveyed to the consumer, just as it did during the computer chip revolution, which was 20 years ago. So productivity has been slow in Canada. I'll close on this. Productivity is slow. We've got a reputation for that. Well, if it takes 5 years to make a decision in Canada and it only takes 2 years to make a decision in the United States, that's 3 years of productivity that's lost forever. Time is money, always was and always will be. I think we've forgotten that. And so I think it's not about having a new computer on your desk. It's about reducing uncertainty for business so they can get business done faster. We'll see our productivity pick up. Just take, for instance, TMX comes online. That is going to make a bump in Canada's productivity numbers that, people aren't really thinking about.
There's a lot in there, and obviously in the investments that we make today and the possibly, as you say, disinflationary nature of some of those, there is on the other side of that some real benefit. Getting from here to there, of course, will require some clear heads to not overreact to some of the things in between. You mentioned government debt. We are running deficits in this country. We seem to not really have any particular party that's espousing no deficits. Is that a concern for us? Would you like to see more fiscal balance by our federal government and elsewhere?
Well, yes, I would have. I would say, but that horse has kind of left the barn. During the past year and a half, 2 years, we could have had a balanced budget and really reloaded our fiscal capacity for the period going ahead for whatever happens next to us. But instead, we've been running deficits these past 2 years while the economy's been over full capacity. That was pretty bad timing, but now the economy is probably, if not in recession, at least in a stagflationary kind of scenario, probably for the next 12, 18 months. And that means that fiscal deficits are probably going to be on the higher side because the revenues are slowing. And there's not much we can do about that. That's the automatic stabilizers in action. But we need to look underneath and make sure if we're using a deficit in this situation, we're using it in order to make an investment that will pay dividends to the economy for a long time. Infrastructure, that's fine. That pays dividends forever. Even childcare, that pays dividends forever. But most of the other things that we're doing do not pay dividends forever. So we need to be very careful to separate those things and almost like run two sets of books. Then we can justify whether we have a deficit for a real reason or if it's just all mixed in there. It's awfully hard to tell.
Stephen, it's so good to have you with us for this. We appreciate your time today.
It was my pleasure as always.
Stephen Poloz was Canada's central bank governor from June 2013 to 2020. He's a special advisor with Oslers and author of the new book, The Next Age of Uncertainty. Time for the takeaway and living on borrowed money. The cost of borrowing was low in Canada and other developed countries for years. Since the great financial crisis of 2008, interest rates were at rock bottom levels, and with few exceptions, stayed there. That made borrowing cheap, and when something is inexpensive, we tend to do more of it. And boy, did we ever. Household debt in Canada rose to record levels. By spring of this year, Canadians owed 180.5% of their disposable income, a level that doesn't work for anyone, not the individuals and not the overall economy. One problem we have is that for a whole generation of borrowers, low rates are the norm. And for a whole other group, home values only seem to go up. For both, borrowing is just logical, since cheap money can be leveraged to build future wealth. Where we run into trouble is, of course, when rates reverse, and not only return to the historical norms around 4%, but have to shoot higher as they've done. That's producing some painful results for both groups. But the most dangerous thing we could do now is try to pretend that this is the interlude and that low rates we like so much will return. Maybe they will, and for sure governments become equally addicted to cheap debt financing their spending habits. But a safer assumption is that rates and inflation are going to stay higher than they have in the past. In that scenario, debt looks a lot less attractive. Saving makes more sense, and most of all, living within our means becomes not just a nice thought, but an imperative. For households, that might mean changing how we live and quite literally where we live. Some will not be able to stay in the homes they finance with ultra-cheap money now that the cost of debt is higher. Others may have to change spending priorities to make debt service possible. But given how addicted we became to the thrill of low-cost borrowing, a reality check is a healthy thing. My takeaway? Don't assume this period of higher cost debt will be brief. Plan for it to stay this way, and then be pleasantly surprised if it doesn't. That's Taking Stock for this week. I'm Amanda Lang. Thanks for being with us.